Hey everyone, we wanted to share some big news in case you have not yet heard. We're here to inform you about the upcoming changes to the Common Reporting Standard, CRS, and the Crypto Asset Reporting Framework, CARF. These regulations have been created and shared by the OECD this year and are expected to be finalized by tax authorities around the world by the end of 2025 to take effect for reporting in tax year 2027. Whether you're a financial institution, a tax professional, or just someone interested in global finance, these updates are crucial. Sean, what's important for everyone to know?
CRS and CARF are global standards for the automatic exchange of financial account information between countries. These rules help combat tax evasion and ensure international cooperation and transparency. TAINA supports organizations with their due diligence and onboarding requirements. Here are some key updates to the regulations that you should be aware of. There's going to be updates to the accounts in scope of reporting. There's going to be more types of financial accounts now reportable, and this also includes certain digital assets and cryptocurrencies. There's enhanced due diligence requirements. Financial institutions will now need to implement more strict due diligence procedures to identify and report accounts held by non-residents. These include better processes of data collection, including documenting if and how they're collecting self-certification forms, as well as additional validation steps taken to ensure that the data provided on the self-certification forms are accurate. There's also, most importantly, expanded reporting requirements. There's newly reportable fields, which include identification of new or pre-existing accounts, joint accounts and how many joint account holders there are, as well as the specific types of financial accounts. Crypto assets, which had never been reported before, now require tracking all the way down to the minute transaction level detail, and they'll follow similar reporting requirements as the CRS. Additionally, measures need to be added to protect the confidentiality and the security of data which will be exchanged. Separately, we're hearing that a lot more jurisdictions have been reaching out to the OECD for guidance on how to better enforce CRS regulations. Jurisdictions, tax authorities in Europe, across Asia Pacific, the Middle East, the Caribbean, and even Africa have all made active efforts to perform audits of financial institutions looking for non-compliance. Together with these updated regulations and these audits, all these changes are aimed to make CRS more effective in fighting tax evasion and promoting global financial transparency. You should continue to stay informed and be prepared for these changes. If you're a financial institution, you should start updating your systems and procedures now if you haven't already.